Hey guys, Jose.arvizu here, loan officer at Sunwest Mortgage, here to help simplify the home ownership process for you guys. And today we're going to talk about how to get approved for a home loan. Getting approved for a home loan can be super stressful, but knowing beforehand what factors contribute to you being able to qualify can help ease the stress and can help guide you in taking the right steps to be prepared to qualify. The goal of these videos is to give you all a better understanding of how lenders determine if you're able to qualify for a home loan, and also so you can know if you're ready to qualify for a home loan. We're going to be covering the three main things that lenders look at when determining if you're ready for a home loan. Now, these three things are credit score, employment, and DTI, also known as debt to income ratio. The first two categories, credit score and employment history, have predetermined requirements that you must meet in order to proceed with the loan. They don't fully determine what you can qualify for. The third category, which is your DTI, that is the calculation lenders use to actually determine how much house you can afford and what you can qualify for. I'm going to be making three videos, one for each of these three categories. And in these videos, we're going to be covering the different guidelines that lenders use for that specific category to determine if you're able to qualify for a home loan. The first category that lenders look at is your credit score. And for the purposes of this video, I'm going to be talking about the two most popular loan programs and the credit scores affiliated with them. These are known as FHA and conventional. You will find lenders out there that have different requirements than the ones mentioned in this video. Maybe they have more strict requirements, maybe they have less strict requirements, but for the purposes of this video, I'm going to give you the requirements that I've seen most lenders give. Now let's talk about the two most popular loan programs and the minimum credit score associated with them. So the first one is FHA, and the minimum credit score for an FHA loan is 580. The other loan program that we're talking about today is known as a conventional loan, and the minimum credit score for a conventional loan is 620. Now, you may be asking yourself, which loan program is best for me? Well, there's a lot of different factors that go into choosing which loan program is best for you, and in this video, we're going to be comparing the two, talk a little bit about the pros and cons of each of these to give you a better idea of which one may be more beneficial for you. The main difference between these two is that FHA is not as judgmental when it comes to your credit score. Now, depending on your credit score, you may see slight differences in the interest rate when you're doing an FHA loan, but when it comes to mortgage insurance, you will see basically the same rate as anyone else that is getting an FHA loan. It is the opposite when it comes to a conventional loan. A conventional loan is very judgmental on your credit score. So if you have two borrowers, borrower A has a 620 credit score, they're barely able to qualify for a conventional loan, and borrower B has an 800 credit score, you're going to see drastic differences in the interest rate and the mortgage insurance rate between these two, because as I mentioned, conventional is much more judgmental on your credit score. So the borrower with an 800 credit score is going to receive a significantly better deal than the borrower that wants to go conventional with a 620 credit score. You may be asking yourself, what is mortgage insurance and how does the loan program affect it? Well, mortgage insurance is mandatory if you're not putting at least 20% down on your property. Now, in an FHA loan, you will have mortgage insurance for the entirety of the loan, and in a conventional loan, you will have the option to take mortgage insurance off once you're at 80-20 loan to value. Now, I will be making a much more in-depth video about mortgage insurance later on in the future, but for now, we'll leave it at that. Let's do a quick summary over the credit scores and the loan programs. So with FHA, the minimum credit score is 580, and for the most part, you're going to receive similar interest rates and similar mortgage insurance as anyone else that's getting an FHA loan. A conventional loan, the minimum credit score is 620, and it is very judgmental on your credit score. So people that have a 620 credit score, 640 credit score compared to somebody in the high 700s, you will see drastic differences between the interest rate and the mortgage insurance. Most conventional loans that I've seen, the borrower has a credit score of around the mid 700s and above. If your credit score is below that, a conventional loan may still be a good option for you, but at that point in time, you would need to sit down with the lender and talk through your options and make the decision that is best for you at that point. Just an FYI, there are numerous credit models that are used out there. When it comes to a mortgage, we pull credit from the 3 credit reporting bureaus, and that is Equifax, Experian, and TransUnion. Also, we use the median score out of those 3. So if your Experian is a 700, your Equifax is a 680, and your TransUnion is a 660, we will use the 680 in order to determine what rate you get. I've had some borrowers tell me the credit score that they see on apps that are on their phone, such as Credit Karma or their credit card app, and ask me to run rates for them and see what rate they can get with that credit score. Being that there's so many different credit models, the number that you see on that app or your phone or that website is probably not the number that we're going to use for our mortgage approval purposes. Typically, the number that you have on your app or your website, it's the number that we use is going to be lower than that, being that we use a different model and it's a stricter model when it comes to credit. Okay guys, hopefully this video gave you a better understanding of how credit score affects your mortgage. A good rule of thumb, pretty simple: the higher your credit score is, the better position you'll be in. This series of videos is to get you started in the right path to homeownership. This is video 1 of 3. In this video we covered credit score. In the following 2 videos we're going to cover employment and debt to income ratio. In the future I'm going to be making much more detailed videos covering all the topics that deal with mortgages and homeownership. In the meantime, feel free to reach out to me if you have any questions about the homeownership process. Also, if you know of anyone that is looking to buy a home in the near future, please share this video with them. As many of you have probably heard, knowledge is power, and the more you know when it comes to home ownership, the better position you will be in. You want to find a home that you love, but you should also be confident that you're making the right financial decision, and I hope that the videos that I'll be making today and in the future will help you achieve that. Well, that's it for this video, guys. Thank you for watching and have a wonderful day.